All right, everybody. Welcome to this episode of Karud Learnings. I'm your host, Andrew Pate. With me, we've got Justin Holder as usual. Justin, so Nike's earnings just blew it out of the water. They just did it, and they're doing it online. What are your first thoughts on Nike moving towards an 84% increase in their online sales?
I mean, it's a long time coming, and especially with the pandemic. I mean, they've kind of captured what they need to be doing here. Yeah, no, it's great. I don't know if you've noticed it, but they've ramped up their app stuff, their advertisement, and I keep getting all these notifications I need to turn off probably of 30% sale. Buy directly through them. It's cheaper, or, whatever for you to go through their app. And if you notice too, in their physical stores, you can't find anything good there. It's all their new stuff is only through their either outlets or their direct online stores. So,
Yeah, I mean, for example, they cut their wholesale partners from 30,000 to, want to guess how many?
what you say, 84% drop from that?
84% increase in their online sales, but how many wholesale partners do you think they got rid of?
Half of them.
No, 29,940.
Oh my God.
960, sorry.
So
But
a little more than half. Just a little bit.
they only now have 40 wholesale partners, down from 30,000, to focus more on their owned and digital media channels. They also are betting more and more on China, which is kind of a double-edged sword that Nike has to walk along with other American companies that do business in China, such as Starbucks and Apple. But they did see a 24% increase thanks to Alibaba's single day there, and that they're continuing to invest in their own stores, their own supply chain, and all of their digital channels, such as their Nike app, which is great, the Nike Run Club, which both you and I use, and the Nike Training app, because those have great UIs, got great user experiences, and having both those three, all the three of those, and the Peloton app, I can tell you those do give the Peloton app a run for its money.
Nice. So what happened with them and Amazon? What was the story there?
So this strategy started back in 2017. Nike decided that it was going to start moving more towards its own digital channels, but not only to its own digital channels, but also going direct to consumer from the digital space. So mapping this out way before COVID drove everything online even more so, what they did have was they had a trial partnership with Amazon. And I happened to buy a few Nike shirts from Amazon because they were easy to find on Amazon and you got Prime Day shipping. Well, Nike decided after that it was that they didn't gain that much of an incremental benefit. And what they did is they invested more in their own supply chain to match Amazon shipping. And then they don't have to give Amazon any margin. They get to keep it for themselves, which would basically that would suggest why that their profit increased quarter or year over year for this quarter. They're capturing more and more margin by selling it more directly to consumer themselves.
Right. I mean, we talked about it a little bit before. They're one of the few, retail companies that have really thrived in the pandemic. I mean,
right, because most retail companies have not, because what does retail usually need? They need a store.
Yeah.
They need people to walk in the store and touch things and try on things and get near one another. None of that's happening right now. So you've seen big brands go online because they either already had a presence there and now they just expanded that. I think of Lulu also when talking about that, but also Adidas and I don't know. What are some that you've seen that have made a good online switch that already had a presence but then decided to bet more on that?
I mean, locally, Outdoor Voices kind of turned their stuff around a little bit. I know they were kind of in trouble before the pandemic, and then kind of increased their sales and their value.
Yeah, they had some retail rollout issues that led to some exits at the company, and then a new president and CEO.
And other issues.
But yeah, they did have an online presence that it now is trying to expand further.
Yeah, trying to think what else. I mean, I know Walmart might not be in the same brand, same vein of the retail, but I mean they've increased their online presence as well. I mean, a lot of the big places that have the infrastructure to do it, take a chance on it. Now it's not much of a chance because we know it works. I think with this, you probably see smaller businesses try to do this. I mean, you've seen all the Instagram ads and stuff from small companies trying to get a piece of this pie.
Yeah, we're starting to see digitally native brands pop up of where they have these are retail brands that have zero retail footprint whatsoever. They start online first, going direct to consumer, and then they decide to expand outwards of that. Allbirds is a obvious example of that originally. But let's get back more to the swoosh. So can its growth be stopped? I'm going to say no. Granted, I am a Nike shareholder because of this exact reason. So what do you think?
I think it goes through cycles within any kind of these big retail things. Growth be stopped? Absolutely not. Nike's going to be a behemoth for years and years and years to come. It might be slowed down, ramped up as things evolve, but yeah, they're going to adapt to whatever the changing landscape of the economy is. So no, they're not going to stop.
What I'm seeing is similar to what the same situation that Disney's in. Disney right now is gaining more market capitalization based on their streaming service, aka a bet on digital. And what they're going to have happen is once their parks reopen, is billions and billions of more revenue come in from that physical location presence. I see Nike is the exact same way. Nike is profiting off of their digital first strategy now. And then once they are able to have their physical stores open back up all across the world, you're going to see the physical retail location revenue come in and billions and increase more profit even more so. That's more of a shorter term, I think. By shorter term, I mean next 1 to 2 years. Um, but what do we think will be, do we think it's going to become a digital first sportswear brand after its physical stores are back and operating as normal? Or what do we think is going to be the long-term future of Nike? Is it going to be you are going to Nike.com to find the newest and latest from there for years and years to come rather than going to a specific retail outlet?
Man, that's hard to say, and I want to say that it's going to be a blend of both, depending on what's making sense at the time.
Do we think it's going to be the Best Buy thing strategy, not strategy, but the Best Buy reality of people will go in store, see the price, and then go home and buy it online, ship it to their house?
There'll be a little bit of that. It's a little. I think it's a little different with Nike because I mean, Best Buy, it's technology. Everything's fairly expensive, but with clothing, probably not. Man, I, I think they're going to cater to the different types of consumers where they're still going to have a big hold in the physical retail, and maybe they still probably stray away like they have been from their third parties like Dick's or Pennies or the small companies, not small companies, small hold in the various retail places, but they'll have their own stores, do the whole experience where you're looking at all the new stuff physically on all in one place, have even certain sales in the physical store that you wouldn't be able to get online. I know that exists, it has existed for a while. Select drops too, because they're doing all their shoes where you limited supply online, but then you go physically to the store, wait in line. It's kind of a whole proprietary experience like that. You get that unique of experience of getting it physically, being the first to get it, hold it, collect it, or go resell it, whatever that is. So I don't think they move totally to that Best Buy model or the total digital as we exit this pandemic, but um, they have a nice blend where they have that backup for the people that just want to do it online, that they know their size, they know all the stuff, and they're able to roll with it online.
Correct. What they
That's what I
do,
see.
yeah, what they do offer is if you do become a member, which is free, you are then offered Amazon-like shipping dates for free. So 2 day shipping, for instance, and then you can have all of your sizes and orders saved, similar to a Fanatics type of model there. And then also, I think a big area of opportunity is for them is to continue growing in China, but also trying to alleviate the social issues that will be a major thorn in the side and sticking point while with doing more and more business in China. But I also think that they could be one of the companies to start leading the charge of not necessarily becoming a sustainable brand, because that's not a reality in the fashion world. The fashion industry is one of the most unsustainable and carbon emitting and water using industries out there. But what they can do is start leading the charge on offsets, I believe, and doing more to capture more ESG investing dollars that way through their stock, and also getting more brand goodwill and increasing more and more revenue incrementally that way.
I can't argue with that. I mean, that seems like a smart business decision on their end. They have the infrastructure to at least try it out and see if it works. And
Do
they're
you
always
think
competing.
do you think they're going to buy the Reebok brand from Adidas now that that's been put on the table?
I didn't even know it was put on the table, to be honest with you. Um, no, I I'd be surprised if that happened. No.
Yeah, if Adidas is jettisoning it, probably not the best sign for the Reebok brand, I would imagine.
Yeah.
I do think that you'll see acquisitions by Nike, though, going into the future, that especially in the digital space, potentially to go bring exclusive communities within the into the Nike fold. Maybe you see them buy out. I want to say Peloton, but I don't see maybe Peloton as an example. Could you see Nike buying out the Equinox brand gym brand portfolio
That's what
and
I
making
was
them
thinking.
exclusive Nike owned businesses?
Yeah, absolutely. I mean, especially if they're getting into this, the app, stuff with competing with now Apple, Peloton, all that stuff. They have their own proprietary equipment. I would not be shocked, and especially if they can link it to their apps in a really creative way. Um, yeah,
I
I
also
don't see why
believe
not.
I also believe they have the manufacturing power and economy of scale to be able to start making better premier at home fitness equipment.
Yeah, yeah, that will undercut Peloton by a lot, especially these
Right. You
premier
undercut
brands.
Peloton, you leverage your name as the global sportswear giant over an Apple Fitness Plus, and by providing the actual fitness equipment. People are more likely to trust that brand than the company that's trying to make a car and also their iPhone and also and also their cloud storage network.
We're gonna
Um,
talk about that today.
I know. Uh, but I think that's another opportunity if they want to incur that manufacturing capability. They have the expertise to do it. They have the brand to be able to do it, and
Oh,
they
and don't forget about they're always competing with Adidas, and
always
that sets them
competing.
aside.
Right. And if there's a three stripe life bike that comes out, they're going to have to do it. So you might as well be the first mover advantage.
Yeah, no, absolutely. That's look out for it. We call it here first.
So to wrap up, we think Nike's going to keep doing it.
Oh God, yes, yeah,
Always got to end on a pun. Everybody,
always.
like, rate, review, subscribe. You get it. See you next time.
Bye.